Hi, I'm Russ Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Todd Sohn. Todd is a managing director and technical strategist at Strategas, as well as a Yankees fan in the aftermath of last night's playoff loss. Todd, how are you doing this morning?
Ross, I'm a little bummed about the game, but you're here to brighten up my day.
Yeah, absolutely. A little market talk to brighten up the day. Let's start with some sector work that you all have done recently. You are part of heading up the sector research effort. And, we're in this bull market. We're hitting all-time highs. The seasonality of September and October didn't really shake the market. And yet your all's top sector in your rankings is utilities, which is traditionally very defensive, kind of lower growth, kind of stayed. What do you attribute that to? Why are utilities working so well here, and do you think that can persist?
Yeah, it's a great question because utilities been a little bit uncommon in this cycle. And when you look at our technical sector rankings, they are the top group. And that's mostly because they have a large portion of stocks still in an uptrend. They have a large portion of stocks actually outperforming and pretty good momentum. Now, I think the difference today is that you're not getting confirmation from, say, staples and healthcare, the other traditional defensive sectors. So that's a good thing. You're also seeing credit spreads continue to tighten the multi-year lows. And so we think that utilities are sustaining this momentum because of the thematic and structural growth story route that's going on from, say, AI demand and the demand for nuclear power as well. That's a little bit of a longer term story. And so while there can be some mean reversion risk for utilities, we like going the thematic route. There's a plenty of handful of ETFs out there where you're not buying just utility type names. You're going to get some industrials in there. You're going to get some, say, materials or energy type names in the infrastructure space, more or less. And so I would not look at utilities being strong as a market risk off signal, but rather a much different structural story for the space going forward.
Yeah, certainly the power needs of all of this technology that we're developing and hopefully implementing are going to be up multiples. And so utilities kind of have a bit of a growth story, which is rare for them. So, we're kind of at the precipice of 2025. We're entering year three of this bull market. You mentioned that there wasn't confirmation from spreads or defensive leadership that this bull market was set to peter out. What are, maybe one or two things that you're watching really closely heading into the new year that might either, confirm a continued expansion or be something that kind of picks at you as far as, how long this thing can keep going?
Yeah, so there's two items I would keep a very close eye on. One is the new high data. So market participation breadth has been pretty good. You have all the equal weight sectors more or less breaking out to new highs. But I want to make sure the momentum component, which we measure as the percentage of stocks trading to a new 1 or 3 month high, also is in on that move. And when you typically get a surge above, say, 50% for the percentage of stocks at a 1 month high, that's confirmation that momentum is coming back into the market. That's been a little bit light over the last couple of months. And so the longer that persists, it suggests that there's some slowdown going on underneath the surface. That shouldn't be a problem until the first quarter if the non-confirmation continues. So I want to keep an eye on that. And secondly, sentiment. I do think it's surprising that for a market that's within a few points of an all-time high, the investor survey data we get is not very aggressive as opposed to, say, a few years ago when it was really euphoric. And I also find it interesting that when you look at futures positioning for volatility, it nets out to a long position. You only just see net long volatility following equity market corrections. Now, of course, the election's coming up. Maybe that's why there's that net long volatility as a hedge. But still, the survey data not being euphoric and market participants being long volatility is very uncommon to see at a new high. So does that change heading into 2025? Do we see more aggressive investor sentiment? That's one other item. But so far, sentiment, I think, remains an asset, and we'll be on guard to see if that changes.
Let's finish here. Looking abroad, international has been such a laggard for, 15 years now. Are there bright spots out there? Is there international breadth that you're seeing, or is it still kind of a U.S. story as we head into 2025?
I think international is going to be important because you are seeing some weakness out of Europe. I want to be mindful of that. Although you're not seeing the Europe banks or industrials really deteriorate, that's good. Japan is going through some form of a consolidation after a really strong year, so I am mindful of that as well. And then you have EM, where you look at China, the breadth data there has been really strong, although I am mindful that China is one of the most volatile markets historically. So that's more of a trading vehicle than an investing vehicle. And then India is currently, I'd say, mean reverting as China strengthens. I'm very curious to see how India responds to oversold conditions and if that story is off the playing field into 2025 or can that trend resume higher. So I do want to be overall mindful that there is some dichotomy playing out in the international landscape. Does that leak into the US eventually? We'll see. But so far, the US continues to shake off any sort of rush from the international equity markets, and risk appetite is still very much present here.
Good to know. Well, we'll keep up with those trends heading into 2025, and hopefully get a chance to talk to you again before then as well. But Todd, thanks so much for the time today.
You too, Ross. Thank you.